What's going on, guys? My name is Jeff. So Activision Blizzard had their Q4 earnings report today. Guys, I have a lot of material, so I'm going to try to move through these pretty fast because the stock actually bounced up and started trading up. I want to share my thoughts on that before I log off on the video. So let's just cut the foreplay and dive in, okay? So their Q4 non-GAAP EPS of $1.29 came in line, and their GAAP EPS of 84 cents, that actually beat by 27 cents. And they have bookings of $2.84 billion, guys, and they had a $200 million miss, okay? So this is a pretty big miss in my opinion, and this just follows suit with Electronic Arts and Take-Two Interactive. All of these gaming companies are coming up short on earnings right now, and so immediately once this report hit, the shares traded down about 1 to 2%. And so I figured I would share the little bit of good news Activision Blizzard got. They actually declared a 37-cent dividend. I actually predicted this in my video the other night. I said I look for Activision Blizzard to try and bump up that dividend to keep investors motivated, and they did exactly that. But it's not exactly anything to be bouncing off the walls about. You know, their prior dividend was 34 cents yearly, and they bumped it up 3 cents to 37 cents. So not a huge increase on the payout side, but it was an 8.8% increase from the prior dividend. So just look at it this way, guys. You will get an extra penny per share every quarter now. Alright guys, so I started looking through their report and I stumbled upon this graphic. I want to share this with you, and let's just briefly go over it. Obviously you can pause the video and look at this for as long as you want. But right over here, guys, the Activision side of the company, it had 51% operating margin. Now Call of Duty was the #1 selling console franchise worldwide in 2018, and this is a feat that they have accomplished for 9 out of the last 10 years. So they did really good with Call of Duty. Black Ops sold through more units than Black Ops 3 in its launch quarter, with PC units averaged 4 hours per player increased. Then we step over here to the Blizzard side, and it appears that Overwatch and Hearthstone both saw sequential stability, and World of Warcraft saw expected declines post the expansion release this summer. And then over here on the King Digital side, guys, they had a 38% operating margin, and it says that Candy Crush Saga saw strong monetization and retention trends, contributing incremental growth for Candy Crush franchise. And then this past quarter, King had 2 of the top 10 highest grossing titles in the US mobile app stores. So, you know, it really looks like Activision is their cash cow, okay? Like I said, in Q4, the 51% operating margin, that was an all-time high. Their 2018 segment operating income, you know, that 41% operating margin, that also was an all-time record. And guys, of course, Call of Duty being the #1 selling game. But between Activision and King Digital, it does look like the company is performing pretty well. Now here's where things kind of took a strange turn, in my opinion, at first glance, but then once I've had time to go through the report, listen to the earnings call, and kind of process all of this, it actually makes quite a bit of sense. But the company will lay off about 8% of its workforce, about 775 employees, as a part of a restructuring where it'll deprioritize disappointing projects. And obviously, this just kind of goes without saying that employees will be focused on key franchises, including Call of Duty, Candy Crush Saga, Overwatch, Warcraft, Hearthstone, and Diablo, okay? The shares actually started trading up, guys, because this is actually seen as a move to improve efficiency, okay? Institutional investors kind of took their valuation metrics, where this stock should be trading at, and kind of figured out where the stock is currently trading at, and then figured that, you know, Activision Blizzard is making some cuts to make their company more profitable. So I actually set my limit order to buy more shares at $39, and we never reached that point, and it just expired in after hours. But now let me give you my personal opinion on why the stock also traded up. Of course, like I said, you know, the laying off the employees, the improved inefficiency. If you take Electronic Arts and you take Take-Two Interactive and Activision Blizzard and compare them across the board, Electronic Arts is down about 33% from their all-time highs. Take-Two Interactive is down about 36% from their all-time highs. And Activision Blizzard, guys, is down over 50% from their all-time highs, okay? And this is the biggest company. You know, Activision Blizzard is the biggest of the three companies, and it is the one that is getting beat down the most. And so I think fair valuation for this company, like I said, even on a disappointing earnings call, should still be around $50 a share. What's going to happen with these companies, guys, guidance is going to get so low that they're easily going to be able to beat on earnings and the stock will start trading back up. It just kind of has to hit that point where the guidance is so comfortable that they can easily outdo the numbers that are set in front of them. Maybe it's going to take another quarter or two to kind of work through this, but I'm still a big believer in Activision Blizzard, EA, and Take-Two Interactive. All three of these companies, guys, I now have a position, all three, and I plan to stay with them long term, like very, very long term. But anyways, guys, that's all I got for today's video. Drop a comment. Tell me what's on your mind about Activision Blizzard. I would really like to hear that. And guys, thank you so much for watching the video.